to trade with simple and efficient setup that makes trading easier and stress-free for you. Yes, that's what I mean. Easy and stress-free. Hey, what's going on, guys? I hope you are doing good in life and trading. I have a new video for you guys and I'm sure you'll like it. Just make sure you stick around to the end because I provided a lot of valuable content for you. I want to also mention that one thing you want to keep in mind is that start with the positive mindset every day and every trade. Remember, your energy also influences your trading psychology and its result, of course. I say that because it is the most important part of trading. So with that all said, let's jump right into today's trading topic. With technical analysis, this is pretty much how my chart looked like. I had things like support and resistance line, I had trend channel, I had moving averages, MACDs, RSI, and of course trend lines, and sometimes much more. So I was thinking that if I have more stuff and indicators on my chart, I can make my prediction in the market better. But boy, I was wrong. And why is that? When I have so much indicators and lines on my chart, they were making me confused. I would get a lot of conflicting information to make my decision based on. For example, I was looking at the RSI and MACD indicators and it was showing me overbought, and when I look at my trend line, it was the breakout entry and it was time to get on the trend. Look at this chart here. What to look for when you have no indicators or lines on your chart? What do you think in terms of the direction of the trade? Are you a buyer or seller? In other words, would you go long or short? It is a tricky question, I know, but it is a logical question and the answer should be simple, right? If the direction of the chart showing an uptrend, you want to look for buying opportunity because your candles are making a series of higher highs and higher lows. And it is downtrend when the candles are making a reverse. So in the downtrend, you'll notice the price makes a series of lower highs and lower lows, right? But by having several indicators and lines on my charts, I was getting confused and planning and making my mind was very difficult and stressful. It was so confusing that made me nervous to pull the trigger and take an action. The chart pattern gave me a buy signal because it was breaking out. But when I look at the indicator, it tells me that the market is overbought, so it is a sell signal. So should I follow the pattern or should I follow the indicator? So you can see where I'm coming from, right? I felt very conflicted, very confused and frustrated, and of course my money was on the table. I was also nervous. A lot of you know stuff that was coming as an information and signal to my chart. It took me a few years to kind of figure out that, technical analysis doesn't have to be this confusing if it's used properly and correctly. So this is the reason in today's training we are going to do just right that. That's right, make our charting and trading easier. To avoid all those confusion in our charting, we need to make a better and proper approach. In other words, we need to cut off the noises and make it easier for us to make a proper execution decision. So what should we do? Well, I picked up the most widely used tools that most traders are using, which also eliminates and avoids false signal. So in my opinion, after many years of trading, I figured out a few tools and a few moving averages that are sufficient enough to help me for better trading and also made me to become a better trader and made it easier for me to trade without any stress. Keep in mind, depending on what type of trader you are, you will need to adjust them accordingly. If you are an intraday trader or swing trader, you will have a different setup and time frame than someone who is an investor and is going to be sitting on the stock or position for a long term. Okay, let me make an example. When you are at the music band or concert, you notice everyone is playing in harmony and every player knows what piece of note to play and what it means and what is expected to be played. It is like a road map that you can get to the destination. So this is exactly how I look at it on the chart pattern, and indicators are helping me as well because they all have the same meaning to all traders, and this is why we need to understand them and use them as probability and prediction based on those tools. Alright, here is what you learn in this video. Number one is where exactly on the chart to buy or sell without second guessing yourself. Isn't that the most difficult part of trading? I think so. And also, you will learn right how to better time your entries and exit with precision, and how to protect your account and maximize your profit by considering mostly your capital preservation. So in this video, I'm sharing with you my secret formula that you can profit in bull and bear markets. And this formula works right in any market. Forex market, stock market, even in the crypto. So sounds good, right? Let's get started. Alright, so let's get started with the strategy and process of this strategy. So the first part of this formula is what I call it market structure. The concept is very simple. So market structure is something that you need to answer. So what I mean by that is, what do you do in any given market condition? Because if you think about it, this market can only go in three ways, right? Market condition we call it. So there is only three ways. Either goes uptrend or downtrend, or my other condition in this market, it's going to be range or consolidation, which means it just goes up and down slightly. The pressure is equal between buyers and sellers. So that's what it's called, those three range. And I'm going to also, if you're not familiar in this concept, don't worry, I will explain it one by one, and I see hopefully it makes it easier for you guys to understand. Here is the concept of uptrend. So here is what I call it uptrend. So as you can see, the series are higher lows, and higher lows are basically all over the map. You can, even the kid can tell, right? This is, you don't have to be educated, high education, or have degree for that. If it's totally going uptrend, you can tell by just looking at it. And if you're not able to basically locate that or identify that, I think you have to read again. So what is the downtrend? Uptrend is the series of candles that are making higher highs and higher lows. So as such, we call it uptrend, right? There you go. Let me call it green. So we know this is uptrend. And of course, the opposite is also downtrend. So the other way of downtrend, as you can see, it's making lower lows and lower highs, which we call it downtrend. So it's easy to tell. You can basically move it at any part. You can tell exactly you're heading down. It's not the perfect chart, but still overall is showing downtrend. So this is what I call it identifying actual market structure. So you don't have to get confused. You don't have to get really difficult to find it. As long as you understand and you are able to identify the market direction in terms of trend, you're almost there. So, and also here is the range trend, or you can call it consolidation area, where stock have series of higher lows and higher highs, but it's not going anywhere. It's just moving up and down in the area that is called range trend. This is actually one of my favorite because it's easier to predict, and you have to just be patient to see the movement to out of the range. But if you notice, there is a few places or spot that the support has held. This is one of the area, as you can see, and here is the second one, and here is the third one, here is the fourth one, and here is fifth one. So what I mean that I like this because it gives you a lot of opportunity to use that area as you're waiting for this trend to break down or up. So I hope you guys understand this concept. So now the question is, what side are you going to take when you see the market is uptrending, right? It's a very simple question, but myself included, sometimes I get this wrong, or I was trying to predict the end of uptrend. I was always thinking back then, okay, it's going up now, it might turn around, so I better buy the bottom so I don't have to buy it up high, which was 100% mistake, because as you must have heard a lot, you never want to go against your trend, right? Trend is your friend. That's a cliche, but you hear it all the time, but you have to understand what it means and also respect it. Respect the trend. That's the first thing you want to learn. Respect the trend. So in the opposite, let's say this one, if the market is obviously going down, you want to be also on the right side. So downtrend is perfect short. So you don't want to go long here because all the sign is showing you this is going down. So there is no point to predict it otherwise. So these are the two main structure of the market that you want to basically understand and put your prediction away, but follow what is market giving you. So very simple, right? And the reason you want to be on the side of the trend, because your prediction or the market movement is in your favor. Why? Because look at how much time you had to get this right. Downtrend, and here is downtrend, here is downtrend, and of course market is moving down and is making a lower lows, right? So these are the one I'm trying to explain. So you don't want to be in the wrong side of the trend, whereas with the other one you want to be on the uptrend because it was making you money on the way up. So why do you want to be against it when it's already showing you the uptrend? So that's the two things you want to remember. Also, you want to respect the market. So, and of course that applies to the time that market is consolidating or is in a range direction or structured, which is it's a series of high and lows in the direction of basically straight to the right. So, And this also has its own strategy that I explain later, and I'm sure you guys understand what I mean by when I explain it better. So I hope you guys enjoying this video. If you do, please give me a thumbs up. If you haven't subscribed, go ahead and subscribe, because I'm trying to bring you value. If you guys realize, I put so much effort on this video to share what I know and what I can say and teach you guys that help you for your trading in future. At least as a refresher for those who know, and for those who don't, keep in mind, always use those tips and keep it in your desk, so in somewhere that you look at it as a pattern, as a reminder, so you can basically benefit from it. So let's move on. Here where we get to the point of entry or price action area, the area of value, the area of significance, the area that is giving us a signal to get in or taking an action. So first of all, we have to know where to buy or sell, right? And for that we need two things, and these two things has to be basically showing on our chart, so we can identify it, and also is respected at least 2 times at least. So let me just show you guys what I mean on the chart. So as you can see here, we have series of opportunity to identify as a support and support area, right? Once we identify the trend, which is this way, right? So now we have a chance to find out which area we can get in and which area we should consider to get in. So let's say this is the trend, regardless of the time frame, because the time frame, it depends on what kind of trader you are. If you are short-term trader, swing trader, whatever trader, based on the time frame you're trading. So you can't really mix those up, right? But the concept applies on any chart time frame. So the area of opportunity is right there, right? That's why it is very important to understand that area, right? And also up here, if we draw our trend line properly, for us it's easier to take an action on the price action area. The other thing is you need to watch for the volume as well, which again, it's another concept. I don't want to make you guys confused, but let's assume this is the trend, this is where we're going to get in, and how we do it, right? Of course, you can draw as many as a support and resistance area. Like here, there is one here, and there's many spots that you call it support and resistance. But remember, with the time frame that we have, so we don't want to, like, if the stock, let's say, come back to here, like if let's say it's come back to here, from here, do you want to buy it here or here? I don't think so. Why? Because if the stock is already shifting this way, my assumption is the trend's already broken. So we don't have an uptrend anymore. This is already broken, right? I'm just giving you example to have it here. Depending on, again, it's really important. One thing a lot of guys or trader make confusion or gets really confused is mixing all those uptrend together. So we need to, for mixing those lines together, we need to first identify. We have to identify the trend on the time frame that we are trading. Okay, let's say this is a 1 hour time frame. So if you are trading in 1 hour, then you're respecting this, you're drawing those lines. So whereas if you're trending in 5 minutes or 3 minutes, I'm sure the lines is gonna be different, alignment and different area. So that's one thing you have to also remember. And if you guys having problem to draw those lines, you can always use that tool that I use, the rectangle here, to just highlight the area of support and resistance, so it's easier to identify for you guys, right? You can go in a different given time. So that's what I use to just give me some area. You don't want to be exact unless you are doing your the stop loss whatnot. That's gonna be something helping you guys much better than just a simple line. And the same happened for downtrend. Of course, you guys know if the stock is showing the downtrend side. Unfortunately, Tesla has been doing this recently, and this is what you want to look at. And of course, you're looking for the area of the short. In other words, if you want to go short, these are the supporting area and these are the resistance area. And in a resistance area, you do the selling opportunity would be around here. Of course, you have to align them in a way that the channel would be much better of usage if you want to use channel. So for the channel, you can just do that easier, but I use this for now. So let's just move on for our and of course, one thing you want to know, once the resistance and support breaks, it becomes the next resistance or support. Like here, for instance, this is our support area, right? This is our support. Once it's broken, now that becomes our resistance. Simple as that. So now we are looking for next support. So this area now becomes support, whereas this area now becomes resistance. So once the recent support and resistance broke, it becomes the new support and resistance. So just keep this in mind.